Welcome back. Now on to Deal Street, and it has been a rocky year for M&A action. Eurozone concerns, a weak rupee and the slowdown in reforms process, at least for the first half of the year, impacted M&A activity. We're now joined by Harish, partner, India leadership team for Thornton, to talk about the M&A activity this year. So Harish, it is, after all that time of the year, time to look back. How has 2012 panned out then for Deal Street?
Well, I think 2012 has not been too bad, considering the kind of factors that you mentioned earlier when you spoke about it. We also had a downgrading worry. We had India as a big concern on an international market. In spite of that, I think for a third year in a row, we would be looking at about 1,000 deals and almost $50 billion worth of M&A. This translates to something like 3 to 3.5 deals a day. So with all these negative factors, I would say it's been a great year for M&A. We saw some activity dip in the middle of the year with all the bad news coming out of India, but I think we've seen significant uptick in the last few months, particularly November. And as we speak, the final news about Hindujas concluding the Houghton deal, which is a $1 billion deal, has come through today. So I would say it's been a pretty good year, considering all the negative stuff that is there in the market.
Okay, not bad considering the macros, but Harish, who were the game changers then this year?
Well, the game changers this year would be some very significant big deals, like the one I mentioned earlier, the Hinduja deal. Another game changer would be the Diageo deal, which saw USL and Diageo get into a partnership. That was a couple of $1 billion. Then we saw the Aditya Birla Future merger, which creates another retail giant. So these are the kind of deals which changes the game in those industries. For example, in the beverages industry, we now have Diageo, which is a big company coming into USL, which is got probably 70% market share, and that's going to change the game even bigger in that market. And ditto, Aditya Birla and Future combined will create another big force in the retail space in time with the FDI opening up.
Right. Also, Harish, we've seen some interesting increase in interest from Japan specifically. So take us through that story, and also, of course, how does 2013 look from the point that we stand at now?
Well, I think we are seeing a lot of interest from Japanese companies into India. Clearly, this is driven by the weak Japanese market and the lack of investment opportunities there. But I also think that Japan is looking at India much more carefully and wanting to increase its engagement with India on the economic front, given the challenges they have with China on various fronts. Japan has been a very big investor in China, but I think they've shifted the focus to India, and we're seeing them coming in lots of industries, including technology and industries which you would normally not associate Japanese companies, and also taking minority stakes, again, not a typical Japanese trait. And I think this is going to increase going forward. On a larger macro, we think that if the economic fundamentals are right and the direction that we are seeing now is good, I would expect 2014 to be definitely 2013 to be a lot better than 2012, both in terms of volumes and values. And as usual, I keep hoping for a couple of nice hostile takeovers in the Indian market, a wish that I've been having for the last 5 years.
Right, Harish, thanks so much. So hoping for a better 2013 for Deal Street. We'll leave you at that. Thanks so much for joining us with the details of how 2012 panned out. Well, with that, we run to the end of Reporter's Diary for now, but stay tuned. Lots more coming up right here on CNBC TV 18.